Yesterday I heard at Bloomberg TV that the share price of Nokia, the mobile telephone maker, was down something like 65% of its all-time high a few years ago. And I thought, how the heck is that possible? Because this is a great company, they're still market leader, I believe. 65% down from its all-time high. It looks like the overall market has gone up very well during 2009 and 2010. So what's happening here? And I wanted to look a little further in it. I don't invest personally in Nokia shares directly. I probably own some of them via the mutual funds and the index funds that I invest in. But let's have a look what happened with the Nokia share price. So here we see a chart for the Nokia share price of the last 5 years. We see a huge bull run during 2007, then 2008 it went down, and you don't see it recovering during 2009. Was a little stable, and then it even went down in 2010. That doesn't look great. If you compare this with the Nasdaq for the last 2 years, for example, the green line is the Nasdaq, the blue is Nokia again. You see that it has widely underperformed the bull run of the Nasdaq of the last 2 years. Doesn't look good for an investor to be invested in Nokia shares. Back to the 5-year chart. So if you would have invested, say, mid-2007, $1,000 in Nokia shares, by now you probably would have left less than $350. You would have lost $650 on your $1,000 that you invested 3.5 years ago. That's a lot to lose. And then you have to think that, say, Nokia was this great company at this time. It had more than 40% market share, great management, fast growing market. Probably a lot of financial advisors would have told you, buy this company, keep it in your portfolio, invest your money in there. If there is a correction or whatever, this company will come back. That was the advice that you would have gotten that moment. If that's what you would have done, you would have lost 65% of the money that you invested in Nokia shares. Yes, so to me this confirms, say, why I don't like to invest in individual companies. I invest in index funds, I invest in mutual funds. I have no time to do the analysis and to follow all the different individual companies. I don't want to be dependent on one company, so I want to diversify my investments, my savings. If I had to do that by buying many different companies, I would have to review the performance of those companies. I have to review the share price of those companies. I have to review the trends every quarter. I don't want to do that. What I do want to do is I want to review how indexes are done, and I invest in index funds, and when markets turn up I buy, and when markets go down I sell. And I think this chart for Nokia compared to the Nasdaq confirmed to me that that is for me the right approach, because 3.5, 4 years ago very few people would have predicted that Nokia would have never recovered after the downturn from 2008. And if you would have been a buy and hold investor with Nokia shares, you would have taken a big hit on your investment in that share. This is what I wanted to share with you. Enough shared for today. Thank you for your attention, and talk to you another time. If you have any questions, please let me know. Place them on my blog or below here, and I will enjoy trying to answer them. Thank you for your attention.